Ellis Martin. Join me for a conversation with Jonathan Wiesblatt, the new CEO of Rockridge Resources, trading as ROCK on the TSX Venture Exchange and RRRLF in the U.S. Rockridge Resources is a publicly traded mineral exploration company focused on the acquisition, exploration, and development of mineral resource properties in Canada, specifically copper and battery metal projects. The company's flagship is the Knife Lake project, located in Saskatchewan, which is ranked as one of the best mining jurisdictions in the world. Meet the new CEO and catch up with the latest news on Rockridge Resources. John, welcome back to the program.
My pleasure. Thank you for having me, Ellis.
You're expanding the drill program at Knife Lake because you have some very decent results from the first drill holes. The strategy is really good. You don't expand the drilling program unless you have those good results, and now you're up to 2,100 meters.
Correct. Every great investment, every great strategic decision in the company comes with building a solid thesis, a working thesis. And the recent drilling up at Knife Lake is confirmation that our thesis is starting to play out. And that thesis is that Knife Lake is a remobilized portion of a primary VMS deposit. So what that means in very basic terms is that there is mineralization that exists. That mineralization is going to occur in other areas that have never been tested. What happened was in late February, early March, we did a bunch of geophysical surveying of the property, airborne geophysical surveying, which yielded a bunch of very significant targets in the region of in and around Knife Lake. The most recent drilling took place 4 to 5 kilometers away from the deposit area. And the first few holes were very indicative, had visual indications of VMS style mineralization, very much common of what we were seeing at Knife Lake. So with that being said, we decided to expand the drilling program from 1,600 meters to 2,100 meters.
Specifically, you're taking a hard look at the Gilbert Lake North and South targets, where very little historical exploration has taken place in the past. You're beginning to test with encouraging mineralization, and you are expanding out, aren't you?
That is correct. So historically, the previous owner of the property put 300 holes into the Knife Lake deposit. There was very little regional work done on the surrounding areas. We spent the vast majority of the recent drill program testing what were very prospective targets that came out of airborne geophysical surveys. And that was at the Gilbert Lake North and South target areas. There was some intersected visual indications of VMS-style mineralization early on in the project, and that's when we decided to increase the meterage from 1,600 meters to 2,100 meters.
Let's review the inferred and indicated resource in the area to begin with. How much copper have we got in the ground or copper equivalent?
So total resources on a copper equivalent basis is roughly 200 million pounds.
Well, that is extremely significant. And I don't think, although I am a shareholder of Rockridge Resources, I don't think the potential value of the company is necessarily reflected in the market currently. Why do you think that is?
Let's just go back to the valuation for a second, and then we can talk about why it's not being reflected in the share price. If your listeners want to go to our website, rockridgeresourceslimited.com, they can have a look at the presentation. It was just updated for April. There's a valuation comp in there. And if you take your eyes along the left side of the x-axis, you'll see Rockridge, and we're trading at 2 cents on a total enterprise value per total resources in situ on a copper equivalent basis. And then if you run your eyes along that x-axis, you'll see a ticker symbol FOM, and that is one of the closest geographic comparables. Foran Mining is located closer to the Flin Flon area, not too far from where Knife Lake is, and that stock is trading closer to 30 cents per pound. So there's a very large valuation gap. We believe that with the drilling catalysts and the results that are pending, Rockridge Resources will have a significant re-rating in the market. One of the reasons why we're trading at that discount is because we don't have a very large institutional following. My job as institutional portfolio manager for the past 20 years is to introduce the Rockridge stories to some larger, more mining-specific funds to help fill that gap. So more eyeballs, more attention, and that's going to come from a very successful drilling campaign today and one hopefully later on this year.
This is not a stock that you necessarily trade, although there are some traders involved, I'm sure. This is a stock that you get involved in, a company you get involved in, and you hold it as long as you possibly can at your own risk comfort level, and let's see what happens. Let's see where it develops. When you mention institutional investors, that's sort of a mixed bag, but you bring in a positive aspect of that. I'm sure you're approaching institutions specifically involved in mining that are not just going to potentially dump their interest when the market rises. Am I right?
Correct. The best type of shareholders are any type of shareholders who share the long-term vision and support of the management team and the board of directors. So a lot of mining-specific funds that I've spoken to over the last couple of weeks and months share the same macro vision as I do. So hard assets will participate in a rising inflationary environment. In that category includes copper and other base metals. We're expecting a devaluation of the US dollar for years to come. With that being said, you want to find very good assets run by very good management teams in very good and safe jurisdictions. Rockridge Resources matches all of those. If you can find demand from some larger institutional organizations, that will help lift the valuation and help to close that spread between Rockridge and some of its larger peers that I was mentioning.
If you want to talk about currency and currency economics, Canadian currency at a 25 to 30% discount US and probably a 40 or 50% discount higher if you get into the euro or the pound sterling. It's a nice opportunity when you can buy it Canadian dollars.
For sure. And the beauty about, let's take it back to Knife Lake again. So Knife Lake is a deposit at or very close to surface. If we can find some more copper in that area, then you're looking at your costs in Canadian dollars. You're looking at a deposit that's very close to surface, so a lower price capital investment for an open pitable mining resource. And again, converting that to Canadian dollars in cost terms, it makes for a very viable economic project somewhere down the future.
Which makes Canada very, very, very attractive for investment purposes. Also, with regard to jurisdiction, I understand Saskatchewan holds the number 5 position, according to the Fraser Institute, of one of the best mining jurisdictions to do business in the world.
That is absolutely correct. And that is why one of the reasons we're very bullish on the project at Knife Lake.
Let's review the management team of the company.
I'm the CEO of the company, just joined in March. The president and its founder, his name is Jordan Tremble. Jordan has 15 years of capital markets experience and has been involved in the resource sector for a number of years. We have an excellent technical team led by Eagle Plains. Strategic advisor is Ron Nedolitsky, who's very well known in the Canadian mining community. Ron worked at the Knife Lake project during its discovery years in the late 60s and early 70s, so he provides a very unique perspective on the project for us. A number of very valuable directors, Joe Gallucci, who's the chairman of the board. He is the head mining banker at Laurentian Bank. Rick Kazmersky, who is a director as well, has excellent geology experience in the province of Saskatchewan, was the former VP of geology and exploration for Cameco, and that just names a few of the key players.
And let's review the share structure of the company.
Sure. So shares outstanding around 73 million. The company just completed a financing $2.5 million into the treasury. The current drill program will cost about 1.2 to 1.3 million. So the leftover is cash in the till. We're ready to go for the balance of the year. So 73 million, about a $11.5 million market cap, fully cashed up, and very clean capital structure.
John, it's great to speak with you again. Thank you so much for joining me today on the program. Speak with you soon. I've been speaking with Jonathan Wiesblatt, CEO of Rockridge Resources, trading as ROCK on the TSX Venture Exchange and RRRLF in the United States. I'm Ellis Martin.
Subscribe to the Ellis Martin newsletter. It's free. Go to ellismartinreport.com and fill out the quick and easy pop-up form.